Yes, sir. Uh, let's quickly go through the little bit of stats before I go on to my presentation. Just wanted to take you through a couple of stats before we begin with our actual presentation. So if you take a look at this one, what you see here is out of 260 equity mutual fund schemes, only 42 out of 260 mutual fund schemes are outperforming Nifty. This is the data compiled by one of those guys. So you see, if 42 people, see, basically what are we trying to do whenever we're trying to invest? Why are we entrusting our funds to mutual funds? Because we think that they are better than us. They are better informed or they're better educated than us. So they will be able to beat Nifty returns. That is the minimum expectation. Why Nifty 50? Because Nifty 50 is the easiest equity scheme. Probably you can probably put into directly Nifty Bs, where it's an ETF, exchange traded funds. And if you want to do anything more than Nifty 50, right, you need somebody with little bit of skills. That is the first understanding you need to have. Otherwise, why would I pay fund management charges and couple of other charges which I have to pay for the mutual funds and still cannot make Nifty returns? If I'm paying anything, let's say 2.5% you're loading and all those things charges, if you see, look at the mutual funds, I think you will have at least 2.5% every year. That is the cost of entrusting your funds to mutual funds. And if this mutual fund, after paying 2.5% kind of a loading factor, even if even E cannot beat Nifty 50 returns, it's probably we are not doing the right job. That's the first thing you have to understand. Why I'm benchmarking against Nifty 50? See, Nifty 50 is an index where the exchange itself will keep churning the stocks. Good stocks, it will keep in Nifty 50. Bad stocks, they'll remove themselves. So Nifty 50 becomes quite, the strongest stocks will come to Nifty 50, the weakest stocks will move out of Nifty 50. And I don't have to have a mutual fund manager to put into Nifty 50. I can just directly go and buy ETF, Nifty ETFs, or bank Nifty, whatever, bank Bs, Nifty Bs. So there are a lot of ETFs where the funds will directly put proportionate amount into Nifty 50 stocks, which can be comfortably done. If I'm choosing a mutual fund, my minimum expectation is they have to beat Nifty 50 returns, because Nifty 50 without any 2.5% charges on my account, I can generate Nifty 50 returns. So this is the first pretext you have to understand, right? And now people who have paid 2.5% loading and entrusted their funds to some mutual funds, how many mutual fund schemes are beating Nifty 50 consistently? So if you look at the stats, clearly it is saying that only 42 out of 260, that means close to 15-16% of the funds are actually doing their job. That is called as alpha. We're generating alpha. That's the reason the entire tool which I'm going to call is an alpha returns, because you have to generate alpha in the market. And now equity, if you look at ET Economic Times, they say 28 schemes, only 28 equity schemes consistently beat their benchmarks in 3, 5, 7, and 10 years. That means putting money into mutual funds doesn't serve the purpose of generating an alpha in the market. Basic funda is, if you have to, it is not just like, okay, you look at HDFC or ICICI or something, you take Reliance Industries and put money into Reliance Industries, you think it's going to give beat Nifty 50. Not necessarily. On a very long term, yes, it might beat. But if you last 1 year, what is the returns of Reliance Industries? Hardly anything. What is the returns of Nifty 50 in the last 1.5 years? Hardly anything, hardly 1 or 2%. It is not, it doesn't even give you a savings bank account returns. FD alone gives you 6%. Savings give you 3.5%, 4% around. That means if you want to consistently beat Nifty 50, you have to constantly look for the stocks which are beating Nifty 50. That is the agenda. Now, how do we do this? It is not blindly taking HDFC and putting money throughout the year in the last 5 years, 10 years. Yes, it is not that way. If you do little bit of study, you will be able to beat Nifty 50. And to beat Nifty 50, you have to choose a stock which is beating Nifty 50. That's the agenda. Then how do you do this? You understand what I'm trying to convey? Are we together? Are we on this?
Yes, Guru.
Any concern so far? Nothing?
No.
No. So that means what we have to do? How do we choose? You cannot choose fundamentally. because you cannot fundamentally say which is a better one. If I give you 2-3 stocks or 4 stocks or across sectors, if I give you sector, which is a better sector, auto sector, because more or less the PE, EPS, all those things, if you take a look at more or less in a sector, the best 5-6 stocks will be good. Infi, Wipro, and other things which you look at, most of them are having a pretty decent books. But if you look at IT stocks in the last 6 months or something, it's not doing pretty well. So even in this worst times or the bad times where Nifty is hardly giving you 1 or 2% returns over a period of last 1.5 years, you will be able to beat the returns with appropriate methods. And now what I'm going to do is I'll give you, I cannot give you the entire logic of how I'm doing this, but I'll give you pretext how I do this. What thought process I've given to this particular system to choose a stock, to choose an entry, to choose an exit. Entry and exit is where my proprietary works come. So I have done a couple of other maths there. So I'll tell you how to choose a stock. And there is no fundamentals here. There is absolutely no technicals here. I am just comparing the prices to choose a stock. How do we do this? First thing is, if you understand one of the basic methodology in any technical analysis is relative studies. It's called as relative strength. What is relative strength? We are trying to compare the strength of Nifty versus a sector or versus something else. So if I go take you to the first step. So first step for me is this one. My first step is this one. I am not a PPT guy, so bear with me. I would always go with actual market and data. So simple thing that I have to understand is first step is I have to select the stock. Which stock should I select? This stock should outperform Nifty at any given point in time. Outperform Nifty. How do I do this? Should I use fundamentals or should I use technicals? None of them. We will do some statistical studies there. One of them is probably relative strength studies. What is relative strength? Basically, if you look at any script on online, you will understand what is relative strength study. It's a ratio chart. It is going to compare the percentage returns of a particular stock or a particular sector with particular benchmark that you want to choose. So in my tool, what I've done is there is something called relative strength. This is where I do a stock selection. So in this, what I'm trying to do here is it is going to compare. Currently, this chart is not, it looks like candlesticks, and it is neither Nifty pharma price or Nifty price. It is something else. It is derived from these two. Right? It's an advanced RSI, not the traditional RS you look at, but this is an advanced one. Right? This is the first step which I'm doing. So I'm going to compare how Nifty 50 or Nifty pharma is performing against Nifty 50. Now, as and when the price is trading above this red line, it tells me that Nifty pharma is outperforming Nifty 50. Basically, the first step for me is to choose a sector which is outperforming Nifty. So whenever you look at traditional analysis or other conventional way of looking at the markets, for a stock or for your portfolio to outperform, you have to give 20% weightage to the stock, 40% weightage to the sector, and 40% weightage to the overall market. This is how you have to understand. Just because some odd stock is doing well doesn't mean that it is going to outperform. Stock alone cannot. If stock supported by index, good. If stock supported by index, sectoral index, not the benchmark, not the Nifty 50 I'm saying about. First is stock 20% weightage you should give. Second, 40% weightage you should give the sector. And then next 40% you should start giving to the overall market. Maybe Nifty 100, Nifty 200, Nifty 500, whichever benchmark you want to consider, you have to give it to them. So basically you have to do a first step filtration. Now here what I'm doing is Nifty pharma. Is it good? In the last 10-15 days, it is being going up and it is trading above this trend line that I've drawn. So Nifty pharma is outperforming. So now this is the time where Nifty pharma gives better returns compared to Nifty 50. Just do some stock. I think in the last 3-4 weeks back, I was looking at Realty. It was doing fantastic job. Look at this. So in the last 1 month, rather than putting your money into Nifty 50, if you put into any real estate stock like DLF, Godrej, whichever it is. So when I got this result of markets outperforming on this day, 10th of April, my system said, okay, realty is doing better. So now after 10th of April, if you look at, let's say DLF or any other stock in the real estate sector, let's take a look at DLF on 10th of April till now. So 10th of April, where it triggered here, right? Here it is triggered. So somewhere from 380 all the way towards 427 real estate sector. So 380 to 427 is a good 40, 45, more than 10%. Has Nifty given you 10% in the last 10 days, 15 days? Not necessarily. 2-3% hardly. 3-4% at the most. Look at Godrej Properties. One more real sector. So it triggered here. The entry triggered here around 1,200. Now it is seeing 1,324. A good 10%. How this is how. See, so now you understand how much Nifty has done from 10th April till now. Has it given 10%? 10th April, somewhere here. So it was about 17,600. 17,600 till 1869. How much is it? Maybe 3.5%. Whereas if you put your money at the same time into real estate sector, it would have given you better returns. That is what this particular first filtration is telling me, this real sector. Now, if you look at IT, my system is telling right from here, it is telling me right from 28th of last year, 28th March of last year, only for a very brief period, it said, yes, go ahead with IT. You think, okay, there was a surprise after Infosys results. But my system said, this system started telling you that do not put any money here. This is where it tells me, do not put any money into IT sector. And then comes a lot of people think it's a surprise. Now, if you do the right study on this day, where it started going down, from here to here, it was a buy. From here, it was saying, don't enter. And what was that date? It was somewhere around 16th of March. So 16th of March is where the system said, no more IT. Infosys. Where was 16th of March? Somewhere here. 16th of March. It said, no more IT. And now from there, this was a big gap down 10%. So at least a month earlier than the big gap down on Infosys, we had already an alert. It said no to TCS. It said entire IT sector, it might be your favorite. I don't care. Because the studies are telling me that do not entertain IT sector. So 16 somewhere here, it said no. So hardly made anything. So now this is a time where instead of, if you had any stocks exposed to IT, that was a time where you exit. Because if you're sat on any of this IT sector, it would have given you 10%, 15% drawdown. Rather putting into Nifty, rather than putting into Nifty or any other thing, you put into IT, you will get 10 to 15%, 20% drawdowns, or flat, or some negativity. So this particular chart is telling me, if you look at this, when it start coming down, it says, when this is below, when this chart is below, it says Nifty IT is underperforming Nifty 50. This is a time where it's better. If you do not know what to do with your portfolio, it is better to put into Nifty Bs rather than sticking around Nifty IT. Or there was a better option, you would have put into a part of your portion, you could have put into real estate. Part of it would have put into pharma. Look at pharma. If you look at Nifty pharma, or let's say auto, is auto doing well? Which is better? Is Nifty 50 better or Nifty auto is better? It says sideways, up, down. This is the phase where I come. Probably, yes, a small portfolio could come into Nifty auto, not big. If you look at, let's say, mid-cap 100, is it good? Hardly anywhere it has gone. It is stuck somewhere. But a small portfolio can be allocated. Now, if you look at, let's say, oil and gas, data is not good. Let's say metals. No, it says no to metals. Entire pack of IT metals, it says no. That means in the last 3 to 4 months, at least in this year, calendar year, I would have said no to IT. I would have said no to metals. I would have said yes to pharma. I would have said yes to realty. So 2 sectors out, 2 sectors in. If you compare with the Nifty Bank, which is better, putting money into Nifty, overweight on Nifty Bank or Nifty 50. It says Nifty, it is outperforming. So if you see this rising, this tells me banks are outperforming Nifty 50. Now this is the first step. I am going to choose a sector. Let's say Nifty Bank is outperforming. In this Nifty Bank, which is better? It is not that, okay, sector is good, I'll put money into any of the stock in the sector. It is not right. You have to choose the strongest sector first. In the strongest sector, then you have to do a strongest stock. First filtration into the sector. If sector is bad, I would not even look at some stock which is oddly doing good. Because if, let's say in IT, if TCS is doing well and Infosys, Wipro, and other big companies are doing pretty bad, there is a higher probability that this thesis, which is swimming against the current, could be dragged. That is the reason I would not go against Nifty or the sectoral index. This is the first filtration. So now Nifty Bank is doing well. This study tells me Nifty Bank is doing well compared to Nifty 50. Now in Nifty Bank, is every stock doing good? Bharat, you chose a good sector. How about a good sector is fine? How about a good stock in the good sector? Not all the stocks in Nifty Bank may be doing well. There might be something which is not doing well. Why would I put my money into RBL Bank if it is not doing well, if ICICI Bank is there? So now once I choose a sector, I have to choose a stock. Then I'll, on the left hand side, what I do is I will put Nifty Bank on the left hand side. Then I will start comparing. Okay, Nifty Bank is good. Why did I choose Nifty Bank? Because it is outperforming Nifty 50. In Nifty Bank, there are 12 banks. Not all 12 banks or 13 banks may be outperformers. I have to choose now a strongest stock. Now what I start doing, I will start putting from Axis Bank. Is it a good one? No, it says Axis Bank is underperforming Nifty Bank. So if you put your money into Axis Bank in the last 1.5 month, it would have been not good. So now can I prove that? Let's take Axis Bank. It might have gone up. I'm not denying it, but not as good as other stocks. So see this? So this system right away told you, if you think Nifty Bank is doing well, putting your money into Axis Bank would have not made any returns. Look at this. Axis Bank, nope. Not in this financial year, or not financial year. In this calendar year, it has given any returns. So system said no to Axis Bank. A, B, let's say Bandhan Bank. This also says no, it is below this red line. It says no, Bandhan Bank is also ruled out. Let's say Can Bank. Is Can Bank good? It says yes, Can Bank is decent. You see D, which other bank? ICICI. ICICI Bank here and there, not the best one. Which is doing well then? SBI. Yes Bank is reasonably okay. HDFC, Big Daddy.
Bank.
Big Daddy is also not doing well.
Yeah.
It gave an exit 5 days back. See this? Today it was a 5% down. But if you ask this system, it gave you an exit on 17th of April only. It said no to HDFC Bank. Till then it was okay. See, it was doing well. So 17th of April, HDFC Bank was out of my system. And what happened today to HDFC Bank? See this? Today it is down 6%. Whereas if you follow the system, HDFC Bank was out on this day when this red candle came below this red line on 17th of April. So you would have not been a victim of this particular gap down, which is doing well. It was doing well here, from here to here. So when there is a cream, you take it. When the cream is out, you get out. HDFC, ICICI, which other bank? Yes Bank. Yes Bank is not the flavor anyways. I think I have removed the data of Yes Bank after it moved out of futures. So which other bank that we have? So it was partly led by, let's say, Kotak. Kotak. You forget Kotak, IndusInd Bank. Kotak is outperforming the last 10-15 days. See this? It's still good. Kotak Bank is good in the last few days. IndusInd Bank, not good. So I think it was, the rally was led by HDFC Bank, supported by SBI and ICICI, a little bit of Kotak. Rest all banks are not even worth considering. RBL, now Bank of Baroda. This is pretty decent stock. So basically, the entire rally on Bank Nifty was led by a couple of PSU banks, and then very selected. So basically, when you look at this, you would have not put any of your money into Axis Bank, Bandhan Bank, and a couple of other stocks which are not doing well. So basically, you put HDFC Bank, it led the story. 17th April, it gave you an exit. So basically what it's doing is, it is this entire system will start giving you, if you keep doing this, it will only push your money into a stock where there is a momentum. Once the momentum is out, you're out. So this is where I have done the first step. My first step was into choosing a sector. From the sector, I come to stock. If the sector is good, only if the sector is good, I'll go further down into, this is called a top-down approach. You move from sector index to stocks. Bottom approach is usually from stock to sector. So you come from the top down, right? Now, if you look at further top down, you can probably compare US versus India also. US is going through some turmoil in their banking sector. India is not doing, India is a little more resilient. Now you say, if you want to do top down approach from the country itself, you can probably choose India over US. Further, if you want to do it, you can compare the macroeconomics. I'm not going to macroeconomics. I'm only going to macroeconomics and saying, I will only choose sector, benchmark index. Nifty 50 is my benchmark. You can benchmark anything, not necessarily have to benchmark Nifty 50. You can benchmark, let's say, Nifty 500 also. Bank of Baroda is doing decent, actually, compared to the entire sector. Bank of Baroda. Bank of Baroda is doing decent. See? Without any emotions attached. When HDFC Bank gave an exit, you have to exit the stock. There is no other go. There is no favorites here. If Infosys is doing bad, Infosys is doing bad. There is nothing I can do. See, if you compare Infosys here, probably it would have not even put your money into that, somewhere here. If you go to individual stock level on Infosys, Infosys said get out on 1st of March only. So this financial year, there was Infosys would have been out of my portfolio. You may have some emotions attached to Infosys, but I think this system gave you right from 1st March. It said no. That means your exit was somewhere around 1,500. Now it is sitting around 1,200, 250. So basically, with no emotions attached, the system will do the things for you. So you don't have to go through this, because this is the first step. From first step, I'll go to the second step and third step. And this is what you need to concentrate on. You don't have to worry about resistance. I just gave you some brief of what I'm trying to do, why I'm trying to beat Nifty 50 returns. Right? Let's take some examples. Let's say, what is the returns of Nifty in the last 1 year? Let's say I have X amount of money. I have put my money into Nifty 50 in the last 1 year. Let's say I'll take Jan 2022, Jan 1st. So Jan 1st of 2022, Nifty was somewhere around here. Nifty was around 17,700. 17,700. Now it's sitting at 18,069. 17,700, already 300 points, 2.5% maxed out. 2.5% maxed out. If you're sat on Nifty 50 for last 1.5 years, close to 1.5 years, the returns on Nifty 50 is hardly 2%. Bharat, can you create a system where it beats Nifty 50? That is the subject of this particular session, right? So now what I'm going to do is I'll pull up So this will start pulling up the stocks which are actually having a momentum now. So now you have to go to alpha returns, right? Let's take some stock. Let's take Indalco. I don't put money into Bosch. Okay. So let's take Indalco. What is the returns of Indalco in 2022 till now? Right. So if you, this is the returns. So this, what this particular page does is it will do the filtration, sector filtration, and after sector filtration, it will do the stock filtration. So sector has to outperform in Nifty and stock also should outperform Nifty. The first step is done. Stock selection process is done. Now what I have to do is I have to look at my entries and exits. This is where I have given a lot of, there are 3 or 4 conditions for an entry and about 3 or 4 conditions for an exit. So which is absolutely proprietary, I cannot reveal, but you can make use of this system. I can further refine. Let's see what further refinement we can do. So now let's take a look at Indalco. Let's say Indalco, it has multiple entries. So it gives you an entry price. It gives you an exit price, right? Entry date, entry price. What was the high it made after my entry? What's a percent returns? What's a tentative exit? So it gives you an exit also. So based on a couple of 3 or 4 logics I have given for exit, and then exit price, exit date, percentage returns. And if you want to look at the chart, you can look at the chart with the click of a button. Now doing so, what is the returns of Indalco? What is the returns of Indalco in the last 1 year, where Nifty has given you 2%? So if you, this is the percentage returns here. So first entry was somewhere here, 6%, then 4%, then 6, then 7. So altogether almost 22%. 22 plus 5, 27, 29. Now this is a 5% loss on this. So my returns came to 25%. So if you add up all these things, what you see is you will make somewhere close to 24-25% on Indalco. 24-25% on Indalco. Based on this entry and exit logic that we have discussed. Entry exit logic I have not discussed, but a stock selection was Indalco. So now you pull up Indalco.
Yeah, but Indalco was metals, right?
Metals, yes.
But in that chart,
No,
the
that was 2023, this year.
Oh,
Last
okay.
year it was good. Last year it was good.
Okay.
Yeah. So now if you look at Indalco alone, right from 2022, Indalco was here around 473. Now 2023 here. If you have just bought Indalco on 1st of Jan, around 476, and if you have exited Indalco on December 31st, Nifty gave you 2%, Indalco would have given you 0%. Indalco would have given you 0% returns. If you're just stuck around the same stock. Now what this system is doing, you understand the system properly. Now, first and foremost, it is doing the filtration. So it is trying to find out a stock which is basically better than Nifty. This is the first step. Nifty would have given you 2%. If you put your money in Indalco, it would have given you 0%. This is what most of the people are doing. They think if you do just relative strength studies and start picking up a stock, a lot of people think that you may get good returns, but it is not so. So my system, first thing was when I just gave you the stock which is beating Nifty 50, it probably, if your exits are not good, right, you will actually make no returns. You will actually make no returns. Now when the system, you start implementing the system on Indalco, you would have made about 24-25%. With clearly following entry and exit logic. You don't have to worry about which stock, Bharat, which stock should I worry about right now. You don't have to worry about any of the stocks. So Indalco would have given 25%. A traditional buy and hold strategy would have given you 0% returns. Let's take some other stock. Let's say Let's take some stock. Let's say some big daddy. Let's take L&T. One of my favorites. Let's pull up L&T. So L&T in the year 2022, what would the returns would have given you? +5, -5, 0, +3, then 15, 18%, 18 plus 10, 28% returns on L&T alone of last year, 2022, 22, 23, 28%. Now, did L&T actually give 28%? Larson. So if you have entered somewhere in Jan 1st, on Jan 1st of last year, 1900. Now 2023, almost here. If you exited here, so you enter somewhere close to 1900 and you're exiting somewhere close to 2100. You would have made only $200, which is 10%. Not even that. Yes, this outperformed Nifty. Nifty only gave 2%, whereas L&T, if you put your portfolio into Larsen 2 bro, you would have made 10%. But now if you start following the system, L&T, it would have put you around 25, 26%. See, buy and hold strategy, you can actually better than the buy and hold strategy. You can better your returns than the buy and hold strategy. So first thing is you filter out the stock and the sector, and then you have to put your logic of entry and exits to beat this this system. Not only beats Nifty 50 returns, this system will also beat L&T buy and hold strategy returns. It beats itself. I have not gone into selling strategies because I can probably refine it, optimize it, and say you can sell here, you can buy here. I am not going on the selling side. I am just going into cash market buy and hold with certain entry and exit logics. L&T. Let's take some other example. Not L&T. Some
HUL.
You want to look at HUL. HUL would have not even popped up on my screen. It is doing nowhere. It is not going anywhere. You can look at Hindustan Petroleum. Type something, we'll see. 2022. What was there in? Oh, couple of entries and exits. I have to do the math. Next strategy will coming where you can do the filtration. So this is actually on my this beta system. Actual Reliance actual system doesn't have this because I have not put into production server yet. Let's pull up something else. Let's say Ambuja Cement. Something came up. Let's take Ambuja Cement. So let's say I have put 2022. Right now, you take a look at what's happening in Ambuja Cement. You would have seen somewhere close to 10 plus 29, 40%. 40, this is almost 50. This is a loss. 50, 45%. See, this and this will cancel out. 0. So this is 0. This is -5. -5 plus 10 gives you +5. Plus this +5 and this -5 is gone. 0. Now whatever profit I have. So 29 plus 10 plus almost go to 40-50%. Yes. This is alone, Ambuja alone in 2022. What would have Nifty given? 2%. Ambuja is giving you almost close to 45-50%. If you sat on Ambuja alone, it would have not given you that returns. So where was Ambuja? Somewhere here. So if you enter here, around 390, 400. And if you exit on the last day, so 400 to 520. Not 50%, no? 400 to 520 is about 25-30%, not even 50%, 20-25, not even 25%. So if you buy and hold, oh, Bharat, it is good, Ambuja Cement is good, we've entered here. It is impossible to enter here. It is impossible to exit here. If somebody is promising you entry here and exit here, is impossible. Right? So this is how we look at the portfolio. We don't look at try to enter here, we try to exit here. So basically what we did was we try to enter, let's say calendar year 1st, December 31st, entry exit, hardly 25% returns. Whereas this system started giving you more than close to 50% returns. You double it. Not only by this system, you're not only beating Nifty, you're beating Nifty and Ambuja buy and hold strategy also. So two things are ruled out here. And you'll be surprised if you start following the system, you'll be surprised. Even a stock which has given you 0 returns, or probably it would have given you 40-50% drawdown. Traditionally, that would have started giving you returns. Even that would start giving you returns. Let's take, for example, stock which has fallen in the last couple of years. Let's say I'll pick up, let's say Coal India. Coal India is not doing pretty well, right? So if you pull up Coal India, right from 2017, let's say I would have done this strategy right from 2017, last 5 years, right? 2017 till 2023, if you have done, you would have made close to 93-94% by this strategy. But if you have just bought and hold Coal India, thinking that, okay, Coal India is the next power, probably whatever coal, right? So now if you look at last 5 years data, I'll go to weekly.
Can I ask one question?
Who's this?
Yeah, Someshwar.
Yes, sir.
Are you only considering the FNO stocks or the Nifty 500 stocks?
As of now, I'm
Or
looking
50
at
stocks?
I'm only looking at the top 200 stocks.
Top 200. Okay.
Yeah, yeah. So now if you look at 2017, Coal India was somewhere here at 300, now sitting at 237. So if you traditionally, if you looked at the portfolio, this would have given you negative returns, a drawdown. But if you had start following the system, Coal India would have given 93% returns. This 328% returns is from entry to high. So this 330% returns you would have got if you have entered at the entry price that I've triggered and exit at the highest price, which is impossible. So I cannot get this return, 329%, but I can probably look at 1/3 of the returns, 93%. Even on stock which gives you a drawdown, if you follow the system, you will still make money. Let's take one more stock, which is probably everybody knows it in the last couple of. ITC will anyways do well. You don't have to do it, but I'll anyways look at it. I'm looking at a stock which has given you negative returns. Indiabulls Housing Finance. So if you have done Indiabulls Housing Finance, right, let's say from 2017 till now, your portfolio would have been bleeding. 60-70% of the portfolio has been ruled out, sitting on a huge drawdown. But if you follow the system properly, let's pull up Indiabulls Housing Finance. Right now, pull this up. Now, so far, this would have given you about 227%. It would have probably more than doubled your capital. Right. So I've right away indicated every entry exit. Where was the exit that came up? So even in 2023, it would have probably given you returns. Hardly it would have done anything. But even in the worst possible year, 2022, it would have probably given you 0% returns on this entry, 0% returns on this entry, 12.7% on this entry, 0 here, 2 here, 3 here, 2 here, 3 here. So this alone would have given you 15 plus, let's say about another 23-24% returns. Even on a stock which is as bad as Indiabulls Housing Finance, you can probably double. And even in the worst possible years where Nifty is not doing anything, even the worst possible stock can give returns. So when this worst possible stock can start giving you returns, we don't have to worry about what ITC is doing, right? ITC is doing fantastic. So if you look at 2022, it goes without saying. So 2022, it would have given you 13% here, 3% here, 23% here. So 23 plus, this is around 27, 37, almost 40% returns. ITC in 2022 would have given you 40% returns based on the system. Did actual ITC give you 40% returns last year? So if you have put your money on 1st of Jan here and exited here, so 220, around 220, this is around 326. Yeah, very close to that. In fact, this was better. Right? Around 40-45% returns on this one. ITC is anyways doing outperforming. But was it outperformers? This is where I start whether it is better to, when you don't have to concentrate on all the stocks at the same time. So now if you look at Nifty FMCG, it will tell you when to concentrate. FMCG. See, from here, 8th of April last year, some exits came here and here. Again, this year, from this day onwards, somewhere 25th of Jan onwards, it gave a re-entry into FMCG. When it gave re-entry into FMCG, it did not give entry into weak stocks. It will not give you that. So now if you put Nifty FMCG here, you don't have to do this circus because I've already done it there. Nifty FMCG, and if you compare, ITC would be the best performer. Obviously, it gave an entry here, couple of exits here, but more or less it held. So this gave an entry here on 24th of Jan. It's Jan. So 3-4 days before that, ITC was triggered a buy. Was it good in Hindustan Unilever? It would have said no. No. See? So my system would not even put your money into Hindustan Unilever. It might be your favorite Unilever, but it is not doing well. It is not doing well. That's it. No hard feelings. I would probably, let's say, Nestle would have done better, or Britannia would have done better. Nestle is doing better. Nestle is doing well, not HUL. Britannia. It was, but it gave an exit here. Now again, re-entry coming now. Britannia re-entry is coming now. So some other Dabur, whatever part of FMCG, if you look at, it will not put your money into stock which Dabur is not again. So the system would have not even popped up this stock. Just because FMCG is good, a lot of people say FMCG is good. But which in FMCG is good? Not every stock in FMCG is good. So Dabur ruled out, HUL ruled out, Nestle comes up, Britannia 3-4 days back, yes. Marico, how is Marico doing? Goodbye to Marico. So FMCG is good doesn't mean that every stock in FMCG is doing good. So the system will not even put the money there. Now in the recent times, yesterday what would have triggered, let's say yesterday, but what was the trigger yesterday? Any good entries yesterday? Right? Therefore, yesterday I saw LIC Housing Finance into my list. LIC Housing Finance on 2nd of May, this was an entry triggered.
So we don't have this no sir yet. Like,
you don't have this. It's in a beta version, huh?
Okay.
So if you log in, I think you are using production server. This is not on the production server yet.
Okay.
Right. So LIC Housing Finance triggered a buy this month. Jubilant Foodworks triggered a buy this month, and they are sitting on 4.76. LIC is sitting on 4.76 profit. This is 3.3% profit. India Bull Housing Finance triggered by 3.51% profit. Bosch triggered a buy. LIC Housing Finance, Jubilant, India Bull Housing Finance triggered a buy 3-4 this month. So if you look at India Bull Housing Finance, okay, look at this. It has given you a buy. All right. It would have probably done better than. So exit is not triggered yet. So my entry was about 2-3 days back. Right. It's still in profitable position. LIC Housing Finance gave up by 3-4 days back. Exit is not triggered. LIC Housing. LIC Housing Finance. Yes. This gave a buy on this day, 353. Still profitable. So LIC Housing Finance is already beating Nifty 50 in the last 3-4 days. Nifty 50 is doing nothing. Probably flattish to bearish. But LIC Housing Finance, which triggered a buy 3-4 days back, it is giving you returns already. RBL Bank gave you. Page Industries triggered a buy. ONGC triggered a buy. Indalco is in the buy list again. Bosch in the buy list again. Every other stock would have given an exit also. Right? Page has given you a buy 3 days back. Page Industries. See this? Despite the entire, probably the breadth of the market was bearish today, right? Despite that, we are still doing well, outperforming Nifty. So Page Industries in the last 3 days, trigger was here. On this day, trigger was there. On a bearish day, there was a trigger. Second. Now, in the last 3 days, it would have probably given you 40,152, 41,000 something. Even today is 0.58% up. Whereas, what about Nifty today? Anyways, the story goes without saying. See this? So last 3 days, 3-4 days, Nifty is basically bearish. So opening was 18,142. The closing year is 18,069. Bearish in the last 3-4 days. Whereas Page Industries, LIC Housing Finance are sitting on 2-3%, 4% profit. How about taking home in this week? How about taking home 0.5, 1% loss or 0.6, 0.7% loss versus taking home 2%, 3%? That is where we start creating an alpha. You think paying 2.5% fund manager charges for mutual funds is very small. Compound this 2.5% over a period of next 10-15 years, you will see the amount outgoing from your account. Even if you better Nifty by 2% or 3% or beat Nifty, you know what I try to prove from all these things. I've tried to prove you 3 things, not just one. Right? So the stock selection should be good. If you start using the right tools, you can choose a stock which can beat Nifty first. And now if you start using the system, this system can beat buy and hold strategy of the stock itself. It can beat itself. And third thing, what we try to prove is even the worst performing stocks where you would have seen a 30, 40%, 50% drawdown, you would have made 200% returns. Even its worst performing year. So there was a few probably, see, India Housing Finance will not fall the entire duration. There are a few, there's something called dead cat bounce, mean reversion. So basically the system is also in a way adapting or probably incorporating a mean reversion also. A stock which falls so sharply, let's say for example, at Adani Enterprise. I have removed Adani Enterprise from my system because it was little, I don't want to pull up these things. The stock which falls pretty badly can rebound pretty good. These are called the dead cat bounces or probably mean reversion system. So this system will also probably incorporate part of mean reversion also. Mean reversion is following, trend following is there. Beating Nifty alone, beating itself, even a worst performing stocks will give you returns. If you do a right entry, do a right exit. Risk management. So stock selection, your entry, your exit, and risk management, all 3 or 4 things are taken care. So I've given a lot of parameters for entry, exit. I think I tried about 4 or 5 different combinations for an exit. Trying to optimize. So over a period of couple of months, optimized. And this is probably where I stand right now. Is it the final one? No, not necessarily. So one more, maybe 3 or 4 revisions wide will definitely come. Optimizing, because what I've seen here is, if you see, after, let's say, ITC, right? The scope for improvement, is it there? Let's say in the last 5 years, if you're bought at the entry price that I've triggered, and after you buying, if you compare the returns to the high, is 304%. But what I'm taking home is 81%. So there is a lot of scope for optimizing this, right? So I'll give 2-3 options. Okay, this option, that option, that option, that option. So optimization is, anyways, it is not complete. From last 14-15 years, I'm optimizing my trading or investing. I'm still optimizing. So the optimization is never ever complete. So this is a lot of improvement, scope for improvement. This is probably 5th version. So before giving you this version, I had another 4 versions. So this is probably, this is a better version of last 5 revisions that I have made. So maybe next revision will give you even better than this, because there's a scope. I cannot refine my entries is best. Exit is where I have to play around little more. So I have tried technical entries, I have tried statistical entries, I have tried 4 or 5. Sorry, entries were good. Exits, stock selection, no problem for me. Entry, not a problem for me. Exit is where I have to play around. 5-6 versions already tried. Another 2-3 versions. I have a couple of things which I'll back test, forward test, put some money on it, and then give you a better one. But this is probably beating itself, beating Nifty 50. See, there is always scope for optimization. So you cannot give an entire optimized system every day. Impossible. So scope for improvement is certainly there, which is coming up in my next, see, 405% returns you have made. If you entered at the price that I've triggered and exited at the high, high is not possible. Now 113%. So I'm taking home 30-40%. So another, you cannot enter at the high, sorry, exit at the high, enter at the low. It is impossible. That is anyways ruled out. If I add another 10-15% also, I'm happy with this. For this, as such, I'm happy. Second version will 7th or 8th version will come, which could be better than this. But as such, the system definitely beats itself, beats Nifty. Even a bearish stock can give returns on this.
So this is only for options, Bharat, or I can use it for the cash market also?
No, I'm giving you a stock. I'm giving you entry and exit. What do you want to do with this? You want to go with futures? You want to buy options? You want to do anything? That is your risk and risk appetite. If you have an experience doing it, when you look at options, there is a lot of other Greeks will come into picture. If you understand the Greeks, when to enter, when not to exit, fine. If you want to do futures and do the risk management, fine. Or you want to do cash, fantastic. So no problem of theta decay, no problem of expiry. Any questions?
Bharat sir, this is Amol. Just one small question.
Yes, Amol.
About the exit. Exit when. So is it there? Is there any
See,
stop
right,
loss defined on the exit, like some
everything is
in
defined.
the entry? Okay.
You
In
don't
the
have
percentage.
to,
Okay.
you don't have to worry about anything. See, right now ONGC has given you an entry, right? Entry price is here. So if the exit price is not there, that means it is still in the trade. Here, if you see, this exit
Yeah.
price is blank. That means ONGC is triggered an entry.
Yeah.
Right? After you put an entry price, it is given entry price. It has given you a tentative exit here. Initial stop loss is already given, which is not triggered yet. So it is blank. Exit is not triggered on ONGC as of now. So as soon as the entry price is given, as soon as the entry is done, immediately it will start giving you stop loss. Once you start turning profitable, right, it will trail your stop loss.
Okay. Okay.
It will keep trailing your stop losses. It will not just give you an exit there. So it will give you initial stop loss, and then probably then it will give you an entry. It will give you entry, and then it will give you immediately. It will give you initial stop loss. Is already pointed here, and then it will give you trailing stop loss. So each day it will start putting your stop loss entry, stop loss. It will identify. It will give it to you. Probably another next version of mine, you will have an execute button here, right? So I have to tie up, integrate with a broker. And if I give an execute button, if you execute, this trade will be executed straight away. You don't have to go to the broker terminal and say entry, exit, and all those things. It will directly do this. Even this trailing stop loss will sit on the system. One more button here, which will come pretty soon. So you don't have to worry about any of those things, Amol. When I give you an entry, I'll give you initial stop loss. I'll give you trailing stop loss. Everything is put here. Let's say LS Housing Finance right now in the trade, right? LS Housing right now sitting on the trade. All these are sitting on the trade. Bosch entered at 19,310, right? Exit, tentative exit is 19,027. It has already pointed out. So Bosch is already in the trade now. Right? It has not triggered. So where was my entry? My Bosch entry was at 19,310. And my stop loss is 19,027, which is not hit. Which is not it. If that is taken out, it will give you exit price. It will give you percent return. Right now, this percent return is basically from the entry price, it is giving you the returns. Indalco, 446 was an entry. Stop loss is put at 426. It is not exited yet.
Hi, Bharat, Karyappa here.
Who's this?
Karyappa.
Yes, sir.
What is the holding period for this any stock?
There is absolutely no holding, sir. There are days where I got an exit in 3 days. There are times where it had given exit after 3 months, 4 months, 5 months.
Okay.
Definitely not. This is not a long-term holding where 1 or 2 years, 3 years. For that, I am coming with a new system where it's a trend following system. Probably next webinar would be probably on trend following system where you can hold for 1 year and above.
Mm-hmm.
This is from few days to couple of months, not more than that.
Okay, that means here like it is like a type of one some short-term trading.
This is not trading. This is basically it's not intraday trading. This is basically a swing.
Okay.
Yeah, it's a swing based trading. Basically, you will try to capture a swing, maybe 2 months, 3 months. There are ITC, let's say ITC. You look at ITC exits. If you click on, once you press ITC, you will get this. Click on this ITC, you will see the stocks, entry and exits. Let's say in 2022 or 2023. So my entry on ITC happened on Jan 1st. My entry price was 339. Right now, the stop loss is at 404. Exit is not done yet. So in the last 4-5 months, ITC has not given an exit. So my logic is saying ITC don't exit.
Okay, 404, that is a trading stop loss.
That is your trailing stop loss. Has it taken out ITC? No. So my stop loss is sitting here.
Okay.
So in this all these things, I never got an exit. My entry was somewhere here.
Mm-hmm.
Right. So this is an actual trade is running in ITC as of now. So in 2023, 9th of Jan, entry happened at 339. High it made was 427. Returns 26% already I'm sitting on. Exit stop loss is given at 404. Once the exit is triggered, you have to exit.
Okay. Here in this, like there is so many, I mean, couple of stocks, right? How to choose in among that? For example, if a system gave around list of 50 stocks, out of 50 stocks, which one?
It will not give 50 stocks, sir. Not all stocks will be.
I'm just asking. Okay.
So now, if you want to do this again, it comes to portfolio construction. Wait for a next webinar of mine. Okay, what I'll do is I'll give you portfolio construction.
Okay.
Okay, that is from the stock we have to go to the portfolio, right? So
Yes.
there is a portfolio construction. There is a certain logic we have to look at because we cannot buy 50 stocks.
Correct.
right? 50 stocks will never come anyways, right? So now if you look at yesterday's date, let's say you put yesterday's date 04, 0405, all right? So 5 stocks came.
Mhm.
It will only be 50 stocks, right? 5 stocks came. Now, let's say if I go to portfolio and look at my entire portfolio, right? If I have already got an exposure to metal sector to certain extent, I will exit. I will have to liquidate that and come here.
Okay.
That is your portfolio construction logic. So my next webinar would be on something where from here, how do you move to portfolio?
Okay.
Right?
Yeah. Actually, I joined late. I don't know. Like, I mean, is this like software like you guys are providing or?
So this is a system which I have developed out of my 13, 14 years experience. I've developed this.
Okay.
So there is a criteria for stock selection, sector selection. There's a criteria for entries and there is a criteria for exit, which is all populated on the screen. So there is something called as alpha returns.
Okay.
Okay. If I press on alpha returns, it will start giving you. So based on a date, it will start giving you this.
Mm-hmm.
Right. This is not in a production server. This is on my test server. You can see this beta version is here.
Mm-hmm.
Right. So that version will have the complete visuals also for you, how to look at all those things. So basically, this is the system which I've developed. This entire DeltaCapitis is pretty much that we have developed in the last. It took me almost 3 to 4 years to develop this particular entire website.
Okay.
A lot of
So,
logic runs into this. Yeah.
This one's very
like,
nice. Sir.
Sorry.
This one's very nice, sir. The alpha returns thing. It's very nice.
so
Thank you.
how can you get this access to this one? This software? Do you need to pay to this software or how?
Yes, you. What I can do is, right. I will share a Google form with you. Right. I'll give you this for, let's say, for a trial basis for a month. Take a look at this.
Okay.
All right. Then we can discuss. So what I'm going to do is in this chat box, I am pasting you the Google Docs. Right. So Docs looks something like this. So click on this. Right. And you will get a form like this. Fill out your form. Fill out your email ID, phone number, and any comments you have. Submit this. So I'll have your contact details. So we will contact you. For a month, I'll open this particular tool for 0 cost. You can use it and see, and you can do the back test, forward test, whatever data I've populated, you can do that.
Okay.
Try it out.
Okay. Yeah. Thank you.
Right. So fill out this form. The Google Docs the forms are here.
Sure.
Yeah.
Thank you.
So next webinar probably would be on portfolio construction. Probably next one would be the coming next one would be probably on the long-term portfolio construction or long-term portfolio, how to build a more than, because unfortunately I'm a trader, so I look at momentum in my portfolio. So I only look at momentum stocks. So next version will be on the investing more than a year, which is trend following systems, and probably the next one is portfolio construction. After that one is mean reversion system. So I'm probably having 5 or 6 systems coming up. So watch this space. So probably we'll have a lot of interactions. Right. So with your permission, if you're filling out your Google form, I also have a community where I keep updating my stocks, which stocks I'm looking at, what I'm looking at Nifty index, how do I plan my trade? If you're a trader, a short-term trader, how do I plan a trade? What are the pros and cons of investing now or trading now? So which stocks you should select now? So a lot of updates I keep giving. So with your permission, can I add you to my community Telegram channel?
Sure.
Yes. So if you pass on this number, or I can probably share the link here of my Telegram channel. You can go to Telegram and just search DeltaCapitis. You will be able to see me. Or probably if you see here, I keep putting. So if you look at DeltaCapitis today, I told not to buy. So this is what I do, 8:51 a.m. Every morning I send this. So today I told Bank Nifty managed to break 43,500 and now it's close to all-time high. Nifty bounced off from 18,000 support. 43,500 and 18,200 will be first support levels. 43,000, 18,000 will be next supports. As long as the market sustains above 18,200 and 43,500, go long. 44,000, 18,500 will be resistances. Given the overextended momentum, it may not break the resistance in one go. I will be very cautious on my longs and tighten my stop losses here as markets overextended and close resistance. So I was not comfortable holding any longs today. So that's the reason. And any day, if you look at, I was not very comfortable in the last 2 days.
So, I mean, you trade in index also, right?
Sir, my bread and butter is done through index only.
Okay.
Yeah. So that is where I make my money, my living. So I'm copying this link and I'm posting it here. So that is a link to join the Telegram channel. So click on that, look at my updates. It was a momentum stock, momentum trade also I gave on ITC 3-4 days back. Where was that? Yeah, here also it was. I think every day I keep sending like this. So there was a buying Nifty. Why I said buy somewhere here, I said a buy again. So every day I keep telling this buy, sell, whatever. What is the momentum for the day? What is it going to happen today if you buy or sell, whatever. So this, and I'll give you stock ideas also. Ashok Leland I had given a couple of times where, yes.
What is the view on the Maruti? I mean,
If you want a view on Maruti, first almost auto stocks are here and there. Sector is not great.
no,
But
today it is outperforming compared to Nifty.
Okay, so now if you look at Maruti, this is a very strong resistance. So couple of attempts to cross 8,900 or 9,000 levels has been a failure. So see this, a rally to 9,000, fall. One more attempt, fall. Now it is here.
Okay.
Now, as if the Nifty or if Maruti manages to break 9,000, I would expect 9,600.
Okay.
It is bullish.
Yeah, because completely today it is, I mean,
in terms
since
of
Bank Nifty it is falling, right? I thought that some sector to support the Nifty, they're lifting.
So now if you see here, if you compare Nifty 50 versus Maruti, if you compare, it would have given you a trigger, buy trigger, not yet.
Oh, okay.
Yeah.
What is this, the red line? That is a software, your software that...
Some parameters to filter out.
Oh, okay.
Yeah, there are parameters that are put in to filter out the stock, sectors and stocks.
Okay. So is this like a time zone? What is the time zone for this one?
This is daily. This is daily.
Daily. Okay.
Yeah. Yeah.
Thank you. So this also we can have access, right? For 1 month.
I'll open 2 or 3 tabs. So if you fill up this access form, whatever required, I'm gonna share it with you guys. You'll get an email ID, with the login credentials. So you'll be able to see that particular 2, 3. There's not everything comes in here because a lot of live data is there, which is gonna cost me a bomb. So this is anyways on a EOD basis. The same system can be turned into live basis.
Okay.
Right. So again, see, whenever I have to give you on live, it's going to cost me quite a lot.
Okay.
Yeah.
Okay. Thank you.
Yes.
Hi, sir, Dhananjay.
Yes, Dhananjay.
So when can we have this? In our
Anyways,
regular?
if you already subscribed, anyways, I'll start pushing it.
Okay.
Yeah. Probably starting next week.
Okay. Okay. Sir.
Yeah.
You keep updating this data every day, Bharat?
It's automatic at 5:30, 6 o'clock. You'll have updated data.
Okay, so that you can play the trade next day.
Yes, next day. Yes. I probably, once the paid version is done, right? I could probably trigger a buy around 315, 320.
Okay.
So in a paid version, rather than waiting for the next day to enter, let's say this would have probably satisfied my entry or exit probably at the end of 3:15 or 3:20. It's a live, right? So before the end of the day, before market close, I can give you a trigger saying, okay, you can start buying.
Okay.
So all those things will come again. This is anyways, I'm not charging anything for a month. So once if you want to all those facilities you want, I'll probably at some cost, a reasonable cost. I'm not going to charge you a bomb. Don't worry. I'll start giving you a trigger at 3:15, 3:20.
I have a Karep here once again.
Yes, sir. Yes, sir.
Regarding this option OI data, I mean, analyzing the OI data.
Mhm.
So we have some few analysis on the like OI data, like where the short build up or this. So, but what will happen here, like that OI data can change anytime. Suppose we thinking here like 18,000 today, also I started 2 days back.
Sir, this particular webinar is only towards investing side or short-term trading side.
Okay.
Probably I'll do a webinar wherein how to look at the options data. That's my expertise.
Okay.
So at some point in time, I'll definitely look into options. I'll do a webinar. Probably anybody can be part of that.
Okay. Okay.
Yeah, because I built a system wherein you can, let's say for a very simple example, let's say I'll take a look at PCR. Forget about options time.
Okay.
Right. So today's data, 5th, right? Today.
Yes.
Right from, so this blue line is the modified PCR, not the PCR you will find outside. So whatever you find here, it is a little modified. So as long as this PCR blue line is trading below this red line, this is only bearish market, no bullish.
Okay.
So you have for the entire you have to keep selling. Right?
Okay, red line that is the trend line. This one, right? That is
my decision making line.
Decision making line. Okay, blue
Right.
line should be above that red line.
Blue line is the modified PCR.
Okay.
Right, not the regular PCR. So yesterday, 4th. Right from opening, it is a buy.
Okay.
It gave an exit here.
Okay.
18,240. Again a re-entry here.
Okay.
You would have probably captured, see, if the market is moving this way, you would have probably captured at least 50% of it. Any other day, if you look at, let's say this one, this was a buy right from here, and this one, see, exit. So there's a modified PCR. You can actually start looking at, what do you call, let's say, where was that? Options. You can read the market or you can read the trend analysis just by using options data. Let's say today, bearish side, you have about 255% build up. Bullish side, you only 83% build up. So basically, this is a bearish day today.
Okay, that is where built up, right?
This is all OI build up.
Okay.
See, by 940, 942, you saw 165% increase on the bearish side, whereas on the bullish side, you hardly have 96%. This is a bearish data right from 930 opening side. So there is absolutely a very deepest angle on the open interest side, for which, yes, I would look at a lot of other examples, some other webinar where I can probably look at options data or any other data for that matter. But right now, let's reserve our discussion to alpha returns. I think I've proved 3 points here where a stock can beat Nifty returns consistently. A stock can beat itself. Even Indalco, which gave you 0% returns on buy and hold, this can give you 25% returns. Even a stock as bad as India Housing Finance, which has given you probably 50-60% drawdown, that is giving you 200% returns. Right? So 3 things we can do. If you start following the system, you can do 3 things. Outperform Nifty, outperform itself. Even a bearish stock can give you good returns. So you enter the momentum, exit the momentum. Next up is take all these parameters, push into a portfolio construction that give you a very good portfolio. Now you will start, okay, your next question was how much should I concentrate on this stock? Now when I put into portfolio, then I have to compare the entire portfolio and see, okay, which is the stock we have to remove? Because if Tata Steel is already sitting on my portfolio, if Indalco is a new entrant, now I have to manage. I cannot expose myself beyond a certain point to a sector or a stock. Now I have to put caps there, for which you wait. So next webinar, probably I'll give you a solution for that. Clear? Any questions? Any questions that you may have?
Bharat, correct here. Like usually, I will nowadays like last 1 month here, like I'm picking the mid cap stocks where like it is giving some good movement. I will have an entry and I will for 5% or something. I will exit. I'll keep on rotating the stocks and then okay. So like such in your like I saw here like some it will filter some stocks, right? So if I get some stocks where I can in 1 week or something time frame I can get even 2% or so, that's good for me.
Mm-hmm.
So like a trading point of view I'm saying here, like so I can keep rotating. I can it's like a compound interest. I can
Mm-hmm.
I will enter and I at least for 2% will exit again. I re-enter in the new stock where it came. This
I understand. Okay, what's the question?
So you mentioned right in this software here, like at least momentum stocks. I mean, immediately it has to react. So such a filter. I mean, stocks it can filter here.
That is what it is doing, right?
Okay. That's what initially I asked, like holding period. You said here like sometimes 1 month, 2 months. So if within a one week holding period.
For me, entry and exit logic is set.
Okay.
I have given a certain entry, certain exit. If you're happy with the returns of 2-3%, you can exit however you wish to.
Okay.
If ITC can give 25% returns, if you're happy with only 2% returns, you can exit.
Okay.
I will give you an entry.
Okay.
I will give you exit based on system.
Mm-hmm.
No, you want to modify that system and say, no, I don't want 26%. I'm happy with 2%. It is, so be it.
Fine. Yeah, that's what like I wanted to ask, because some stocks it would be, for example, if you see the ITC itself, like now past 2 years it is performing. Before that one it is completely dead.
Even when it is dead, it will give you, let's say 2020, right? 2020 it was not even popping up on my system, I guess. Yeah, couple of trades came. 2020 it was not doing anything. So even if you do one time, it gave you 2%. Next time it gave you 4% loss. Next time you 9%. Fourth time it gave you 0%. Next time it gave 8%. Next time it gave 0%. Even if it is not performing, yes, it is giving you something.
Yeah.
Right. 2019 here and there. Yeah, here it was probably a loss.
Okay.
When it is not doing well, anyways, to 19, everything lost on that day. On 19 to the 19 COVID times, right? So most of things would have been bad. So 2021, let's say, yeah, it'll pull up whenever it is not saying that. See, 2023 there was no exit, but in 2021 there were exits, couple of entries, exits here and there. Still made some 5% here and there and start getting out. It's not that you will sit. See, 2023 there was absolutely no exit because it is smooth. My exit logic was never triggered.
Oh, okay.
Yeah. There are times where my stop loss would have been very, very quick. Let's say some stock will take a look at. Maybe in 2 days something went wrong, doesn't suit my exit. Trigger an exit, it is out. Let's take some example where it would have an exit. Let me look at it. There are times where 1611. Not wait a minute. Very quick exit I want to show. Oh, see, 1710 was an exit. 2510 was entry was 1710. Exit was 25th. So in this case, what happened? So 17 was an entry at 1859. It touched 1924. Gave 3.5%. But my exit was at cost. 0% returns for me. 0% returns for me. So I take nothing. If you're happy with 3.5%, you would have exited, probably you would have made 3% extra. But that is not my intention.
Okay.
Because if I try to exit for 3.5%, where the big move comes, I will have to take a very bad exit. See here like this, Kotak Bank.
No, actually, I'm not actually saying here like okay, we can wait till the system say exit. But if the system need to take around 1 month to exit, so that's why I wanted to keep
Sir,
on.
see, there is no time frame for this.
Okay.
If it is a good trend like ITC, 4 or 5 months, no exit.
Okay.
If there are small trends, it depends upon the kind of trends you're looking at.
Okay.
Yeah.
Okay. Thank you.
Yes, sir. I think I made some sense in the last 1.5 hours. I think if there are no questions, 2 things if you give me permission, I'll add, or rather I have already given you a link for Telegram channel. You can probably join that. One thing where you get updates. Second thing is you can fill up this form. I'll give you this alpha returns access to you. For next 1 month, you can do the back test, forward test, and find out how it is working. And then we will start looking into premium versions where I'll refine a lot of things there. Done? All right, sir. I think if there are no questions, we will.
I have one more question, last question.
Yes, sir.
Sir, if this trigger comes right now, this one particular stock comes, right? Like, what is the portion of investment we have to invest?
What is the portion of
investment we have to do? Like, say suppose.
Usually, I would say do not expose anything more than 4 to 5% on a particular stock of your. Let's say you're investing 1 lakh. If you have 1 lakh capital, I would say do not expose more than 5% of your capital on single stock.
Okay.
Yeah, that is what I would do. Now again, you have to look at sector. So I would not expose beyond a certain amount of my portfolio into a certain sector. I would not put 50% of my capital into finance. It is overexposure into finance sector. So you have to look at all those parameters for which, Dhananjay, wait for next webinar. You will have all this.
Sure, sir.
Yeah. Any other questions, or probably can we wind up? 2 minutes to go.
Are you sharing the cost today or later?
I will share the cost little later on. Use it first, na?
Okay.
The cost is pretty affordable. Don't worry.
Okay. So how we can use it? You will send a link, or I missed it. Sorry.
So you have this, right? I have in the chat box. I'll paste it again. Go to this chat box in your meeting, the meeting that we're conducting. I am pasting this Google Docs again. Click on this Google Docs. You go in the Google Docs, a form will open like this. If you click on this, copy this, open link.
Yeah, got it. Yeah.
This is here. Give your name, give your email ID, give me your phone number, and comment if you have anything. To this email ID, login credentials will be sent.
Okay, sure. Thank you.
Right. Email from DeltaCapitis. Our firm is DeltaCapitis. So from DeltaCapitis, you will get an email.
Okay.
Yeah.
Sure. Thank you.
Thank you.
So we can expect this by next month or something, sir. Like if you're already there in the.
Yeah, if you're already there with the subscription, you will get this in probably give me a couple of days, probably 3 or 4 days. Probably by end of this next week, you will have this.
Okay. Okay.
Yeah. All right, then I think we will call it a day. Right, and thanks for attending. And if you're looking for any other support, definitely follow us on Telegram channel. Probably we'll have, you can chat with us on the Telegram channel itself. Done, sir. I think thank you so much for attending. I think we'll call it a day.
Sure.
Thank you, sir.
Thanks.
Thank you.
Bye.
Thank you. Thank you.